In this part, we're going to look at the Bitcoin charts and see how you can read emotion in the price and the charts. And sometimes you want to go with the trend if you can get in early, you're going in with the herd. But oftentimes, when the markets get exaggerated, you want to be a contrarian, and that means going against the market. And so when you look at the charts, you see all this price action on the charts, the high, the lows, the closes. But sometimes you have fundamental events that tell a story of things that actually happened, right? So over here, we see over exuberant bullishness where the market's going parabolic and people are, making ridiculous claims. Bitcoin's going to go to 10,000 soon. It's going to go to a million. The media is all over it. They're telling everybody how great Bitcoin is. Over exuberant bullishness, right? Warren Buffett has this quote basically saying, be greedy when people are scared and scared when people are greedy, right? So this is a point where everyone's greedy and where you want to start looking for signs of weakness so that you can be a contrarian and go against the herd, because obviously you see that once this crashed, the price went down 65% in a very short period of time. Now, here's another interesting story. After everyone, see, this was going to happen regardless because it was going parabolic, but just to add fuel to the fire and add some emotion to this, the People's Bank of China came out and saying that they were going to ban Bitcoin and all this stuff. And so the markets immediately panicked. So this was like the China bubble. China was getting into Bitcoin. And then the markets immediately panicked and everybody started to sell off when this happened. And so again, if you're a contrarian, you can go against the herd and generally find good buying opportunities, right? And you can see some signs in the candles where buyers are stepping in. Generally, when you have these long wicks, it's an indication that buyers are stepping in, or vice versa on the other end, right? So this was the China ban crash. And then the price goes up. And all of a sudden, what ends up happening in February is that people can no longer withdraw their funds from this big exchange at the time called Mt. Gox. And right here on this capitulation candle over here, Mt. Gox shut its doors down and we had a massive panic. But notice how this panic just happened to correlate with support on the last drop, right? So another good potential dip buying opportunity and trading against the markets when the markets are too emotional and exaggerated. So, quick 70% bounce off of that big candle. So we had some other stories right here. We had a breakdown of support. And what's interesting is that on this candle, we had a capitulation, which actually signaled the bottom, multi-year bottom at this. And this was the Bitstamp hack. So another major exchange got hacked and people panicked, sold. And basically, this is the lowest price you could get Bitcoin over the course of 2014, 2015, and 2016. And it could even be the lowest for 2017 and on. We don't know. It's possible the price might come back. We shall see in the future. But so far, this is a multi-year low. Great buying opportunity. But panic was throttled. Look at the volume on this, right? Tons of volume. So if you were to buy just for an immediate trade on this bounce play, for example, on a V-bottom bounce, you could make an immediate, let's say, 82%. But if you were to buy as an investment, buy low, sell high, when everyone's panicked and shaken out of their coins, if we go to the low to the high, you could have made, 580%, right? So this area where there was absolute fear in the market was the most profitable buying opportunity in Bitcoin in 3 years, right? So this is where it pays to be a contrarian. And you also have to be a contrarian with yourself, because naturally your own mind will react to what it's seeing immediately in front of it, right? So our brains are hardwired. When you see a lot of red and you see a lot of panic and a lot of fear, our brains are hardwired to respond to what's immediately in front of us. But you have to override that sometimes and be a contrarian even within yourself and your own emotions and do the opposite, right? Same with here. You know, people see the price going up here, they get really, really greedy. They're like, I'm gonna buy tons. Some people were taking out loans or, you know, putting their savings in Bitcoin, thinking it was gonna go up forever. And then, you know, eventually it did make it back up to these levels, but they would have had to stomach this entire bear trend, and it definitely isn't the best way to proceed or go about doing things, right? So this is where you want to think about selling or shorting if you don't have any coins. And this was the best buying opportunity available. Now, we had some other stories in the charts. This one's called the hernia, right? Where a prominent developer rage quit and declared Bitcoin dead. And there was a New York Times article on that. And so that led to a big price drop. But that actually happened to correlate with an ascending trend line right at support. So another good buying opportunity, right? When people are irrational and they just throw away their coins for cheap, that's generally a good opportunity to buy, right? So even from this point, there's a lot of money to be made. And then we had the Bitfinex hack, another big hack. Huge panic. We had some dip buying opportunity there as prior resistance turned support for another good bounce play. And then we had some more fear, some more panic. This is the last major trade I took at the time of this video, where the People's Bank of China, again, it's interesting. Every time we get up to these levels, the People's Bank of China has something to say about Bitcoin. And this is where they were kind of cracking down on a few exchanges. They didn't outright ban it, but they created a bunch of restrictions, stopped them from margin trading and from even like withdrawing Bitcoin and stuff like that, to curb and have capital controls, right? To enforce their capital controls. But that led to another massive panic, right? And market sentiment is really, really low. So people see the price crashing and they automatically, their minds and emotions just start to exaggerate everything. They see the price crashing and then they think it's over, the bear trend's over, it's going to zero, it's time to give up. But you'll notice exact same thing, just like right here, prior resistance turns support, prior resistance turns support. And I even wrote an article when the price dropped 33%. I posted it publicly saying that the bull trend is still very much intact and that I was long from 770. So I longed this really nice bounce play, right? So this was a good time to be a contrarian when everyone panics. And again, you want to sell when everyone is being extremely greedy. So this is how you can read emotion and trade emotion in the price charts and make a lot of money by doing the opposite of everyone else, right? There's a technical term for emotional trading. It's called dumb money. And it's dumb money because it's irrational. It tends to not have a plan, and it's completely irrational. And the smart money, when dumb money is throttled and at its max and they're in full control of the market, the smart money is usually timing and calculating the perfect entry to get in and be a contrarian. Now, naturally, you want to make sure your timing's right. You know, you might not want to just try to buy right here, right? So you have to use some technical analysis as well to be able to find good entries. Unless you're scalping, of course, you could have maybe caught a few bounce plays. So, and we even had this little dump right here, not as big, but again, this was People's Bank of China preventing people from withdrawing their bitcoins on the exchanges. So you can see the emotion written in these prices and in the history. And so if you can cultivate being a contrarian and executing your timing, there's a lot of money that could be made trading against the markets. So that's it for this lesson. We'll see you in the next.